Okay, we're recording, and I'm hoping everyone can hear me clearly. If you can, hit a Y in the chat box, just telling me you can hear clearly. Let's see some yeses. Okay, we're good. If you're having any audio sound problems, you probably can't hear this, but it's recorded. So we're going to begin here with an understanding of what the course is. You've waited and wondered what I'm going to do here, and I'm going to make it really simple. I'm going to give you an understanding that I couldn't give to the first set of people who learned this. There was a problem that I didn't know how to teach people. And the first time I did this, I actually learned more about how to explain it to somebody because I couldn't take my understanding and necessarily all put it into text or understanding so somebody could absorb or chew on that and absorb that information. So we're going to start out by saying, if you have a question or have a problem or anything you need to type in toward me, I'll try not to be interrupted too much, but the little tiny arrow that's pointing here toward that bubble that's on your screen is a chat box. You can speak in there, like many of you've already figured out, and that allows you in these webinars to ask a question. It's not about this one. It's about the fact that we're going to do this on a Q&A in a few weeks. And in 10 days or whatever, when we get together, as I start to receive some email questions, you're going to want a venue to be able to talk. And this is the way to do it. You're going to go in here and you're going to click the chat box here and list your question. Now, here comes into the reminder of something that you don't want to hear and that I sound repetitive and annoying about. But it is, we don't share this anywhere. And I'm going to repeat and explain to you why so that you can stop thinking it's just, some crazy theory. Look, there are edges that few people understand in this course. You will learn about them, but if you share them with thousands of people, the value of them disintegrates. That isn't bad for me as much as it is bad for you, and I'll explain to you. Every one of these edges that I define in here are price observations, repeatable observations that I saw within the market. If somebody took away all of my edges, I will go find more repeatable patterns or behaviors and write another one. You may not be able to do that as easily as I have. Maybe you're not as clued in to what price does. So your job is to avoid sharing, to not put out a chart on some Twitter or social media stock twits, or to draw it up on your trading view and share it with others. Your job is to make use of it and become consistently profitable or consistently more profitable, or figure out how to finally understand price. But your job isn't, you don't want to share it. And that's why there's a legal agreement. And that's why that agreement has a lot of conditions in there. It was written by actually one of the students in this class, is an attorney for major TV shows and all over Hollywood. And that student is friendly with myself, and we agreed, and that person wrote all the agreements and legal documentation for the course. And so the idea here is to keep the information, privately. Don't share the information and ruin the edge for yourself and others. Now, the reason what we're sharing is all kinds of special things that people don't realize. And I normally don't mention any of it early in the first discussion, but I'm going to throw one out just so that you see the value of one little thing can pay for the entire class. One little thing. The market does special things. Has any of the people in this class, have any of you noticed very technical or very specific gap behavior? Anybody? If you have, say yes, would be great. If you haven't, you don't have to post. You've noticed some very specific gap behavior. Let me explain to you that things happen in the market that instantly determine sometimes the entire day's behavior. You watched me a week ago on NVIDIA, and almost 2 weeks ago, whatever it was, on what was it? Tesla, you watched me say from the moment the market opened, I started saying, special day, it's going, it's done, it's going to go. There was a reason. It wasn't a guess. It was something special is aligned. And once you understand that, chills run down your back and you know you've got something that most people don't understand. And so if you're not excited, then you're already ruining this for yourself because you have to be passionate about the market. The students that are passionate, the ones that are excited in my class are the ones who tend to do the best. You know them in chat, people like Michelle, who must have spent 25 minutes in my private feed today explaining how for the first time in her life, she's not getting chopped up and chopped, and that she totally cannot believe her results. And actually, she's afraid to write any of it down or get excited because she's worried it'll go away. This is the reaction of people who have passion and start to see the light of what the power of reading prices. So you want to have that as part of this. If you're not passionate about this, you're already at a disadvantage. I'm already telling you. I noticed this from working with students. Passion is an important part of what we're doing here. This isn't just about money. If you trade well, the money will follow. For some of you faster than others, but you have to have a passion for this because it's not an easy business. I'm not going to promise you stars in the sky that suddenly you're going to be a millionaire. This is hard work, but if you do the work, your results will be just 180 degrees for some of you from where you're at now. So we start out with special gaps. Just one tool, you'll have verified in your existence the value of what you're learning. Okay? There are also special patterns. I have mentioned it in passing, but we don't talk about this in the Zanger chat. But remember, failures, when patterns fail, there are things that occur and often faster. And so we need to know when those happen. And those special patterns are the way I call trades. So you're going to understand after going through this class exactly why I call certain things. You'll know exactly how I call the trade even a year or two ago where you were just going, wow, how did he know? It wasn't that I knew. I just knew it was probable, and the risk reward favored the idea. There are special fakes that happened on patterns. The best moves on the market are when people are screwed. I'm sorry, it's just that simple. You want to know where the fastest, strongest moves often happen. It is often where people are screwed. They will take everyone out one day, and the next day it'll be gap and gone, and you will sit there just wondering what the heck happened. And while you're sitting there, so is everybody else who's sitting there that has been caught off guard. And that is fuel, and it puts on a chase, and we look for octane. These are called octane boosters to me. I look for octane. I look where are people screwed? Where are traders trapped? Where does the behavior suggest that there could be an oversized move now in this direction? And also, there are special conditions where the market turns, and this is how I call market bottoms, and you see me calling the futures. There are special conditions that occur within these things. This is the reason why you signed a 7-page or whatever NDA. These are the reasons. And I'll just show you an example of just yesterday. Or actually, let's do Tesla first. I put it in a different order. Many of you wonder and sit in that chat room and wonder, well, why the hell is he buying a stock right off the open? Dan says wait for the 15-minute opening range and all this other stuff. But you're going to learn the power of, this is called the screw bar. We'll get into it. You'll learn in the class. But this bar was a horrible close the prior day, and the stock was weak, and it proceeded to gap over the prior day's high. And I knew at that point when I saw it, I knew instantly this is a potential for everyone to be trapped, every short to have been trapped who thought they were fine, every long that sold the stock to realize they had just lost their shares. And that's why you get these powerful reactive behaviors. Simple gapping behavior can be that trade alone, 100 shares, 2 calls, and you had your value of the entire course. which is why it hasn't been a sales pitch that I've had to sell people on why to take the course. The people have sold it for me also because they can't believe that you can find such powerful things in the market. Now, it also presents a new problem for some of you, and that is you're going to now have power to see things you've never seen, and you're going to have so many tools on your table that you are going to have to discipline yourself to pick what you like and do a few of those things. You can't be a jack of all trades and a master of none. This is important, and I'll explain to you why. There's a testimonial for one person, and I'm going to explain it to you in a minute. But behavior that happens in the market just on simple gaps. I did this as a hint to show you that one little pattern that you're looking at there, you don't even realize those 2 bars there is enough to make a living if all you looked for and waited for. It is incredibly powerful, those 2 bars. And you're going to start to know this behavior by studying what to look for and then finding the repeatable patterns. They are there. It happened yesterday. This was not a stock I took, but I mean, the market isn't all random. Everybody acts like it is, but yesterday the stock trip opened up directly under an uptrend line. It didn't open $3 below it. It didn't open $1 above it. It opened strategically. And when we understand strategy, we kind of know direction. Strategy-wise, in the case of this example, if a stock gaps an exact something special, if you knew what to look for and you did your homework on those names, or your alert went off and you're fast enough, you'll be catching stocks where literally the entire day will be straight down and you will have caught the high of the day. And it won't be a mistake or luck. It will be preparation, and effort equals ran into one. And when you run into one, it'll all connect. Does that mean you run into this every single day? The answer is absolutely not. This is work. I bust my butt and you will have too. But they're there and they're everywhere. And there is no shortage of unbelievable edges the market provides. If you've done your work and you've done your planning and you've studied and you have your setups down and you have a plan and your process, the market will hand out opportunities. I mean, you have to think about what is happening in the market when something gaps, and you're going to learn that. When something gaps up or gaps down, this is power in the direction of these moves. And you're going to learn why it works. Now, that's all smoke and mirrors. Everything I just said was smoke and mirrors. Let's talk about why the approach works. Let's prove it right now. Because this is the reason that not one student has questioned me that the approach, normally you have people tell you when you're teaching something, well, I don't know if that works in trading. I've not had one person who, even professionals with big egos, they end up saying, well, I can't exactly disagree. The end result is this class is really called collision trading. I want you to understand what I just said. Collision trading. Now, what is a collision? In your car, that means, your car smashes into something else, okay? In trading, what I'm saying is we look to find setups where there is a collision of multiple disciplines of traders that all reside in the same price zone. And that zone is between where we enter and where we stop out. I want you to think about this. How many of you have taken a trade where the only thing behind you was the breakout line where you bought it and a little bit of volume? How many? I'm hoping everybody, because that's what 99% of breakout traders are doing. Correct? Yes? I want to see some yeses. Okay. Now, what happens if I told you that for me to buy a trade or to get into a trade, I need a collision of multiple things to occur, and they can't all be related to the same kind of trader. let's say I'm into a pullback, and let's say I'm using a trend line, and that's one kind of trader. And let's say I'm using support and resistance, which is another kind of trader. And let's say I'm using a Fibonacci ratio, and that's another kind of trader. And let's say I've got those three things, and I've got a pattern. I've got a double bottom, or 2B, they call them. Okay? I've now got 4 different disciplines of traders or philosophies of trading, and they all reside in that area. People will often say things like this. They'll go, well, my trade looks good. It's got a 50-day moving average that it's right above. And they then will take a stop, and the 50-day was 3 points lower. That didn't collide with protecting you from a loss. A 50-day, $3 lower than your stop price is not a help to a trade. It may be nice that you choose trades, and you should choose trades that have good conditions overall, and I'm going to teach that. But the collision has to occur between what we risk from our entry point to our stop. What is in the way from us not losing? I'd like to believe there's a stack of different people that are in the way between my entry and the spot where I'm totally wrong. And that is the entire theory of the course and why nobody fights me. Even guys who have massive egos that are in the course that have a lot more money than me, have done this a lot longer, they end up, after a quick talk, end up going, well, you're right. I mean, that loss I just took, if I had used those 2 other things, I could have selected a more proper stop, and you're right, I could have avoided that. So the end result is collision is what this is about. I don't even like talking about that word, because the entire concept of trading is built on the fact that, I don't know about you, but I don't believe anything works in the market all that consistently. I think that everything fails on a consistent basis in the market. And you may not like that. I'm sorry to be negative, but I think everything fails in the market consistently. It is on a consistent basis. I read Bulkowski's book, and I wanted to cry when I started trading reading his book. He goes into these gorgeous patterns, and then I'm looking at the stats, and I'm like, who cares? 49.51? It's a roll. Give me a coin. It's not much better. Now, he screwed up in his book because, in theory, in my opinion, of course, it wasn't context driven. It wasn't about a trend that it was in, so you couldn't tell where that pattern odds, what they were, because it was a self-contained example. But realistically, I saw that the odds were not that fantastic. And I read books I could read to you right now lists of books on my shelves that I'm looking at, and how to read Steve Neeson's Candle book and this and all this garbage. And the truth was, all of it failed. Every theory failed. Now, why does it fail? Well, the answer is because for every person who believes in breakouts, for every person that has a theory about buying strength, there's an opposite person or professional out there that's using you as their exit for when they were buying it in the dumps. And professional money is not buying resistance generally. They buy in the hole. They can't, look, if Fidelity has billions of dollars to load up into a stock like Apple, they're moving the stock up while they're trying to buy it. They're not trying to cause themselves extra cost. So when these stocks are acting poorly, these companies can amass enormous amounts of shares in a downdraft and then wait. They can sit and wait for that position to turn. They're the ones who create the bottoms. In turn, when they get up to highs and they see excitement and elation, they're the same people who are selling to you. And so breakouts, learning from Dan, I learned that, I started doing breakouts and I was doing them every single day looking for one. And I learned from watching Dan, I was like, he sits for 2-3 months not taking a breakout. And even when he was, it was kind of funny. He'll be like 2 weeks without taking anything. And then suddenly he would take like 5,000 shares. which to Dan was an absolute zip trade. It was a nothing. He wasn't even, it was a $25 stock with 5,000 shares. In other words, he's not really in the game right now. He's detached and sitting around. Well, guess what? I said to myself, I got to make some money. I didn't make money. I instead kept trying to fire doing breakouts in the wrong conditions. And so what happened? Dan didn't lose anything because he did nothing. I lost money trying to force the trading concept in the wrong conditions. What did I learn? I learned that I have to wait. If I'm going to buy strength, there has to be a lot of strength buyers to carry it with me. There has to be plenty of emotional buying that occurs to ramp it through resistance. And after learning that, I realized I couldn't sit around for 3 months straight. I'm attention deficit. I'm one of those people that can't sit still for 5 minutes. And so for me, I couldn't wait around 2 months. I had to find an answer. Well, the answer is I tried doing pullbacks and they killed me. And I realized after a while, wait a minute. It's not good enough because all of these things fail. Downtrend line break, they fail. A double bottom pattern fails. Descending channels, they fail. Fibonacci ratios, they fail. Trend line patterns, triangles, they fail, they fake, they do all kinds of crazy behavior. The end result was, but wait a minute, what trades were working? And the answer was, the ones that were working were the ones that had a multitude of reasons why they were turning in that location. And I actually spent a long time sitting and marking every swing low and every swing high and trying to sit there and identify, why did the stock stop here? Why did it stop here? What made the stock stop here? What made it stop going up here? What made it stop going down here? And I realized there's some behavior and things that you'll notice. You're going to learn things called virgin mids that I identified were one of the major pivots that occur in the market. You're going to learn that there are certain pattern failures that equal nearly a precise target for their behavior. But what came up out of all of this was everything I tried individually failed. Everyone, all the books. Didn't matter whether it was a great book on trend lines or a great book on channels or O'Neill on breakouts. Look, let's be honest, about probably 50–60% of all breakouts now backtest the breakout where they broke out from. They come back and they retag it, which is why I'm a breakout buyer of backtests. I buy those. Why do I do what I do? It's a culmination of trying to get away from the fact that there is a failure rate of everything we do. So we stack multiple reasons in one area, and we gain the advantage of having a multitude of reasons be the reason for turning. And guess what? I have no ego about which one won the battle. I don't care whether it's the fib or the trend line or that I also had the pattern in there. It's the fact of whoever one of them wants to pick this up, that's fine. Just please one of you take this from here and lift it away from where my stop area is. That's all I'm asking. I'm also asking to stop. I'm also using something called layers. So the collision is what we're looking for, but we're looking for layers to collide. And so what this is a game of building a 5-layer cake. The gentleman who wrote that letter the other day in chat, Dave, who wrote that unbelievable letter about the 92% accuracy on 167 trades, he's better than me, his accuracy. Why? He uses 7 layers and I use 3. He is a CFO of a public company that you know the symbol. He is a bright guy. He is the reverse of me when it comes to, how do I explain this? I started in the market in 1979. I started in 2007. So he's got a little bit more time in the market. He is a pretty brilliant guy, and he's definitely not attention deficit. Let's say it this way: he can't focus on more than one thing at a time. I need to do 6 things at a time. So here's a person who knows who he is and studies doing exactly what he's good at. He uses 7 layers to take a trade. Now, a layer is simply one of these conditions that we're looking to collide. So a layer could be that it's at a specific Fibonacci ratio. It's at a specific trend line location. It's at a specific pattern location. But where one person will select 3 and they like actively trading, another person like Dave will use 7 and be such a stickler that his accuracy will be incredibly high, and he will be plotting and slow, but incredibly accurate. Another person like me can't sit still, will take more shots, but as long as the math makes sense, we'll get into later, still be very profitable. Your understanding of layers and making them collide with each other will be your job of creating a trade. That's the entire job of trading. There are conditions and rules around that, but your job is to find your layers, collide them in a zone of price where there will be a defensive structure from the market, and that traders will defend that area, which provides you a low risk entry and a high reward potential, period. Is everyone making sense? Is this making sense so far? I'd like to see some yeses or no's. Is it making sense? Do you get it? Okay. So the idea of why you understand it, I hope, is that you understand how can anybody argue with me? In other words, how can you argue with the collision concept, the fact that we all know that a double bottom fails on us. We all know that it breaks the trend line and then falls back under. We all know these things are happening to us on a consistent basis. I'm just saying put 4 of them together, and now in that zone, within your stop distance to your entry, you know they have to fail on all 3 or 4 of these for this idea to no longer be valid. And so that's why nobody argues with me, because it's strictly so basic in thinking. It's the acceptance that nothing in the market is a sure thing, and that everything is a probability at best in the market. And knowing that, we take these items and we stack them together. In fact, one of the students, I don't know if I could show you real quick here, but one of the students who is a really bright guy in Germany, let me see if I can grab it real quick, actually loved the concept so much, and he's in my private feed, they actually built a program, had a program built for the rest of the group to track it, because it's that critical to make a decision based on this theory. And yeah, he built, let me see if I can see, you can see an image of it, one sec. Bear with me one sec, I didn't plan on, yeah. He literally built a program, you won't understand it at first, but literally a program where his trades, he tracks every one of them individually, what his stack of reasons are around that entry to know why he's going to be in that trade. It's literally in his software. So he handed it out to the group. And the idea is that you need to be tracking and making sure that there are enough reasons to define a high probability setup with enough reward. And that's where we get to the next item here. We stop asking for favors from the market. An example of favor is we're not asking for the trend to change. We're not asking for a stock to enter a stock right into a declining 200-day and a 50-day and saying to ourselves, let's think if this is going to be a profitable trade. The answer is we don't have enough of a variance between our entry and where we would make any money to be worthy to even find out. It will be pushed back in our face before we even have a profitable situation. So we're not trying to fight the hard fight. We don't go into the ring with strong fighters. We want to go in with damaged goods. I know that sounds funny, but we're not looking for a fair fight. We are looking to step into the ring in a situation where we're not asking for any favors. Look, here's an example. It's not a favor to ask a stock like I don't know. Let's take Apple to go back up when it finds support. And the reason why it's not a favor is because here's a strong trending vehicle, highly supported by institutions, that has been going up for years. Why do we have to be the people who pick the one time correctly that it changes its behavior and actually wins in the other direction? How about we get the 75 times in the last 3 months that it simply did what it was supposed to do? We don't need to do the hard trade. We can look at the market as being a bus, and it's on a bus route. And all we're trying to do is step on that bus route and climb on and climb off with consistent profitability. That's all. So I see people in that chat room daily asking for favors from the trades they take. And what I mean by that is it's not just favors asking to go and short the hardest, like a price line, but it's also asking for favors in their entry location. Look, here's an example. You'll have a room full of people. A stock will be $3 underneath all-time highs. They will be wanting to start now. The next $3 is all resistance. It's been resistance for the last 6 months. Nobody has wanted that stock for the last 6 months in that region. But that person is buying into that region, hoping and praying they get an early shot into a breakout. Think about what your reward was compared to your risk. The reward is if it breaks out, you were profitable. The risk is you could sit in that chop zone for the next 3 months, and it hasn't done it for the last 6 months. So why are we anticipating that we've figured out that we're going to get it the one time it does? We can't. We try to avoid asking for favors from the market. We ask it to keep doing what it's already been doing. We ask it to behave the way it's already been behaving. We don't ask for special treatment, and so we can be rewarded within its normal behavior. Sometimes it will act abnormal, but we're not planning for that, because if we did, we wouldn't be able to choose trades that have the right formula for success. Now, we simply step onto a trend and stop trying to change the direction of price. As you become more skilled, that will depend on your time frame. As you folks know, you've seen me call exact tops. I haven't done it on recent in futures, things like the high of Brexit, the exact low of Brexit within like 4 ticks. You can use these tools to get more aggressive, but my suggestion is there's no points for winning in your mind. The only success is winning in dollars in the end. So realistically, your job isn't to be right here, it's to be profitable. We're going to try to do the easiest things first. We'll worry about whether you want to get more complex and advanced later. Okay? Now, when all of this fails, the fact is the last item on this list is the holy grail of trading. We're going to allow simple math to provide the edge. We will never stop having losing trades. We will never stop them. There will always be losing trades. You have to understand that my approach here is layers which provide multiple opportunities for that zone to be defended. In theory, if the collision is strong enough with enough reasons in that area, price will be defended. If we've looked left and done our research as we're going to learn to do, we're going to find that there's a certain formula that we need to bother to take a trade. If we take that trade, if we're wrong, we're going to lose 1. And if we were right, we're going to win 5. And basically, when it comes down to the end of this entire game, the truth is a monkey could be taught to trade if I could simply keep them on the math formula. Because the monkey would understand that when the monkey is wrong, It accepts instantly the $1 loss. And yes, the trading results will look like -1, -1, +5, -1, -1, -1, +7, -1. It'll be the same repetitive process of a bunch of losses, but the one loss covers 5. Does that make sense? Does everybody understand it? The math is the reason. I didn't invent the math. The math was stolen from Paul Tudor Jones and a couple of other experienced traders that are billionaires that realized that they weren't in it to prove to the world that they were the smartest guy on Wall Street. They just accepted the fact that if they got it right, they had to be paid enough. If they were wrong, they'll take their small wounds, they'll take their paper cut and move on. Dan can't explain it this way. He doesn't verbalize himself this way. But Dan is rich because of that last line. Dan would be poor without it, period. Dan is not more accurate than other traders. I have students that are far more accurate, and he even says it. The end result is he's not about trying to be right every time. Dan simply, when he's wrong small. And when he's right and starts to really be right, he puts on that money and makes it work on big winners. And when you're hitting a shop for $40 and your next trade is a $2 loser, you're not hurting. You're not hurting. That's how this works. So this right here, this page right here, is the whole method in theory. In theory, why it works is because we're going to find a multitude of reasons in a specific collision zone. We're going to get in there where we have a defended stop by multiple technical approaches. We're going to enter, know the math in advance of what the risk is of that stop compared to what the potential reward is. What's the hurdle in front of us? What do we have to jump or leapfrog to even get to the promised land? And are we asking for a favor for it? And once we do all these things, in the end, one of you is going to have an accuracy ratio of 95 or 90, and one of you is going to have an accuracy ratio of 35. And just so you know, the one at 35 may be making more than the one at 95. And I mean that. CLT in my course, you all know him from chat. Everybody knows CLT, right? Futures trader, right? Okay. CLT is about the most diligent student on the planet in my forum, and his trades are like 20 and 25 to 1 risk reward. You have to understand. The fact is, it wouldn't matter if he was wrong 96% of the time. At these formula, you get my point. Obviously, we don't want to get that absurd, but the end result is he can afford to be wrong much more than he's right when he's being paid 20 times what he loses on a losing trade. And so he embraces the fact that he doesn't care to be right. In fact, he jokes and he says, I suck, but I'm up 43% for this month. So let's get past all of these belief systems, and we're going to get down to, a system that works. The collision of these layers, along with not asking for favors and simply knowing some real simple math to make it work. Okay? Now, next part is you got to put away your ego and opinions. I have to tell you, my opinion sucks. My opinion of what is happening, I have no idea. Yesterday, I didn't know if the reason the market was going down was North Korea or because of the NFL is pissed. I don't know. I'm not an expert in news. I don't understand what happens. I don't really care, to be honest with you. I have an opinion about a stock that, I knew Apple was a strong stock. Did I have an opinion that no, when it's pulling back, $60, that it was still going to keep going up? No, I'm a fair weather friend. I have no belief systems that make me brilliant about what's going to happen next. But I will tell you what is brilliant, and that is just listening to what price says, being willing to put away the ego and the opinion, and simply reading. For many of you, this will be the difference. I will tell you that there was an interesting statistic from the first class that I did. The software that I use allowed me to tell how many times a person watched the course. And of course, I had some big players that are hedge fund guys and successful or friendly with Dan, and whatever, they watched it one time or two times, and no positives to speak of. Okay, this trade worked, nothing fantastic. The people who watched it the most, were total rookies. And that's because they didn't have a frame of reference or an ego to deal with. The market has already beaten them. So they have open ears. And so this is the hard part. If you're really educated and really brilliant at the market and the rest, then the course will teach you new tools, but you have one hindrance, and that hindrance is your own internal belief system. The fact is, the market constantly tells you you're wrong on a day-to-day basis. If you accept it quickly, you are rewarded for that. If you don't accept it, you end up holding losers and doing horrible things. So I would like you to believe and understand that even if you know it, it's how you apply it, and that you stop to put away the opinion and the rest and simply try to look at it from an unbiased, clean view, which is what the class will teach you. Now, this is why it is how easier to teach a rookie. Is the rookie doesn't have the ego yet, or has been battered and beaten from the market. And so this person is willing to just follow rules. How many in here had beginner luck when you first started trading? Tell me if you had beginner luck when you first started trading. Easier when you first started? It was the worst thing that happened to me in my trading career was early luck. I started in 2007, and I did 77% my first year. Who could tell me? Who could give me advice? Dan could, but even I wasn't listening that good then. And the next year I went broke, and then I was listening. So why do people have beginner luck? And that is because they don't know enough to start getting in their own way. They don't know enough to start getting in their own way. You need just enough information to apply some simple concepts. Once you apply those, you need to get out of the way. And the rest of your work will be reading Mark Douglas and working on yourself to stay out of the way. That is going to be the hardest part of your job, staying out of the way. And might I add, this happens for people who are 30 years and 15 years on Wall Street and that run funds and hedge funds. I mean, in my private feed, we have people who own firms, run trading firms, are in hedge funds, own hedge funds. They have the same problem. They get in a rut and they got too smart and they have to go and dumb it down and get back to basics. And this is hard for a lot of people, but I'm letting you know that you can get back to beginner's luck. It's that place where you stop believing you know and you just start following a process that makes sense. And you're not living in a world of random rewards. You're truly behaving properly. And that proper behavior is paid. You're paid back for that in spades when you finally hit. And all you continue to do is behave properly. So forget what you think you know. It's how you apply it. What I mean by how you apply it is you're going to have already known about maybe fibs. You may not have known that I only use two of them, the 50 and the 61.8, but you may have known what they were the whole time. Doesn't matter. It's how you apply it in conjunction with other tools. So an example today is the pullback on the NQ, which I didn't catch. I was involved in COST or something. We were having a problem with the 200-day on this thing. And the pullback, it was into a gap. It was the fib, the 61.8. It was another thing I can't explain right now. It was a pattern. All of those things collided in that one area, and it was the low of the day on the NQ. If you had an opinion, you may have not just read, and you may have said to yourself, I don't like the way the market looks. This is a false bounce. This is fake. But you'd also be out 30 handles on a trade. So this is the time to smarten up and realize it's almost better to play dumb and just simply wait until these things collide. And the best way to do that is to turn everything into a process, a repetitive process. I repeat that, a repetitive process. Meaning, I see many people in here that will say, well, this time I exited right here. And they're all excited and they smile. And they say, wow, I really nailed that exit. And the next 6 they do it on, end up screaming right past them. And now they say they had a great exit and the stock is up 20% past them and keeps climbing without them. Process. We are not trying to master a single decision on a single trade. Unless you're planning on making outrageous risks per trade, each trade is just a culmination of a string of pearls in the process of trading. And so you're going to do it repetitively and consistently. And by doing so, your results will start to become consistent and reliable as well. It'll still be a numbers game, but because you're playing a math game and because you're waiting for a bunch of conditions to collide, the numbers will start to coincide with a reliable process. You will end up learning things like runners, not selling your best stock just because it hits a target, making sure you sell partial and you keep some, and you allow those winners to expand. It's not all about money. Remember, how many of you have caught a beautiful trade, sold it happily because it hit its target, watched it go up for the next 4 days, and that stressed you out and you were angry about that trade and then missed others that you could have caught? Of course, because there's no process. So in essence, you end up spending 80% of your time punishing yourself. You're constantly finding an excuse to punish yourself. Well, let me tell you, you'll still punish yourself because I am responsible for everything that happens in the market for myself. I don't have any scapegoat. I don't use anybody else to blame. When I followed somebody else, when I was in that chat room following Dan, I lost a ton. Not because Dan wasn't a good trader. You can't be a follower. You have to know why you're there, where your stop is, what changes would drop you out of that stop. Once you have a process, you get past a lot of the internal fight and anger that goes into this process, and you stop wasting all that energy and start just simply looking for the conditions in where you can make your living. And when you do that, you get away from a lot of these problems. And so that's why a repetitive process, somewhat boring, is a positive. It's not really supposed to be. When you're doing this right, I have to tell you, it is a really boring game. That's why I have plenty of time to talk. Once I take on a good trade and I've got 6 of them going and they all are at 1% risk or whatever it is, I don't want to necessarily, if they're all at 1% risk, put on 20 1% risk trades. If they all go bad at one time, I'm missing 1/5 of my account. So I have plenty of sitting time waiting around for the next pitch. And so you'll find that if you turn this into a process, you will be waiting for specific pitches. And it will be boring and repetitive. Sorry, but that's just the way it is. So again, put away the ego and be willing to do that. The students that didn't are the ones that learn generally the lowest amount of information from the course. Confidence. I'm going to share with you throughout the training examples of other students and their results. I have shown thousands of real-time entry and exit ideas and things to you guys in chat. My results are let's say it this way, when Dan sat next to me and he was showing me, I didn't believe him, and that's not because I didn't believe him, but internally you didn't believe. I think when I went to Dan's seminar the first time, and I sat next to a bunch of people who were getting the results as breakout traders that were good at it, and I met a few of them and saw the results, my brain stopped being judgmental and it stopped making excuses, and I started to believe. that it was possible. In other words, we tend to be a little bit leery of people selling anything or sharing anything. And so for your confidence, I'm going to share with you, and you've already seen it from others, that the confidence should come, don't believe me. Don't believe any of it works. Just know that other people are doing it, and you seeing them do it is enough to know that it works. I need in your heart of hearts for there to be confidence that you build. If you don't build confidence, trading doesn't work. If you heard me about listening to and watching, you can do the audio or do the book, but if you heard me about doing Mark Douglas's book, it was really important. Confidence is the glue that makes trading easier. And the reason it does is when you're confident, you stop looking over at what this guy is doing, and you stop looking over at what that guy is doing, and you stop trying to take a flyer at this one trade just because nothing's going, and you start to just settle in on your process. And that confidence leads to more confident trades, which means you stop covering over your eyes with jaded glasses that end up taking garbage or making mistakes. You need confidence. In order to gain that, I think it can easier come from when I say it. So some of you students are going to start having great success. I hope they'll do what I asked the other groups to do, which is share it with me so I can give it to your fellow students. Let them believe I'm not right. Let them believe you for all I care, but I need them to be confident. Because if the group is confident, if you are confident as a student and you own it and into these and believe these things that we talk about, and you build a belief system as such, it will work better. And I cannot explain why the human brain works the way it does, but I can tell you without confidence, the job is much harder. Much harder. I can't tell you why. I don't understand the human psyche, but I just know it is. Okay? Here is an example of a student, Ryan, who is in the class, who did 161% since the trading course, since my last update from him about a month or so ago. And he did 161% since the class, and he does one trading pattern. One. He does one setup. That's correct, one setup. He specialized. The guy's busy at work, doesn't have time to be sitting around and reading the market all day long. He used one setup. He culminated one setup where there were a bunch of layers that all collide in the same area, and that's all he trades. And his results show based on that one example. He took what I said, and he said, well, I'm not like you, Randy. I can't be doing 70 things at once, and I'm busy at my job. So I'll take this channel, and I'll take this fib idea, and I'll take this support resistance idea, and I'll take those layers and put them all together, and when I find them and they all collide in the same area with your reactions, I will get in. And he's had phenomenal results. Does everybody work that way? No, he's the only one who selected just one pattern. But it just proves the point is you have to be yourself. So there's a reason why in this course you're going to see that I don't demand that you follow any kind of exact set of layers. I'm going to let you choose, because if I force you to try to be exactly like me, you will fail. Dan, when he taught me, tried to show me to trade exactly like him. Dan has done that over the years with 100 people, that have sat in his house over the years, whether it be friends or relatives, and they sat behind him. They didn't get it. They left no better. Why? You can't be exactly that person. Nobody is exactly. I don't care if I sat you in a room exactly with Dan and you were lucky enough to get where I was, you still wouldn't be exactly Dan. There are parts of it that you wouldn't want to absorb, or you wouldn't like, or wouldn't feel comfortable. And so that's why you have to tune this to yourself. If you haven't figured that out already in trading, you will in this class, because when it feels wrong, no matter how many layers that's on the trade, you'll never feel comfortable, and you'll always look for an excuse for an exit. And that means you're not embracing the trade that you're looking for. It means you're not on the right path at that moment. You need to be looking for a setup where you feel comfortable. Once you do it, it makes sense to you, it works for you, and you're comfortable and you're confident in what you're approaching. Confidence also needs to be documented. When you have winners, we need to document them. And the reason we need to do that is we need to know a path right back to them when things aren't working. Because I guarantee you there are going to be periods where nothing is working. Everyone has bad streaks. I don't care who you are. You will do fantastic for 3 weeks, and then you'll have a week where nothing's working. It will happen, you will adjust, and everything will go back to normal. The documentation or the tracking of what you do will have will be a great source of relief, putting you back on track when you run into those struggles. So the part for many of you that will end is and I'm hoping it will end because watching chat is, to me, sometimes, it's not to be rude, but it's just laughable. People are buying just anywhere, and you can't just buy anywhere. It isn't. Sometimes you're going to see that a lot of the areas where you've been buying, and some of the names I hear, see, even I know, I see you buying right into resistance, and the risk below you is $4, and the reward right in front of you is you're lucky to get up the next dollar first. And you're not in a fair fight. You're going to be a battle. You're at a castle wall, and behind you is nothing. And so you're going to be fighting into a brick wall without enough reward for that risk. We're going to get rid of those problems. But it's going to take work. I'm trying to give you some of the negatives so that you put your head in the right perspective and don't have this belief that it should be easy. Many of the students make it look easier after some time doing it because they get into a rhythm and they get confident. As soon as they get cocky, I whack them. But confident is good. But as long as you realize you're one moment away from another losing trade, there are no shortage of them. I have them all the time. So I just need you to understand that is part of the formula is losing. For some of you, it'll also be a lot of changes in your behavior of how you choose even your size. Look, there's a size for everyone in this room right now where you go from being able to logically think through a trade and enter properly to a point of where you're so nervous that you can't even hold it properly, and now you're screwing up the trade strictly because of every little tiny move and twitch. That has to be avoided. We have to make decisions based on technicals, not emotional craziness. So all of this is going to come into play. For many of you, that may mean reducing your size so that you can properly trade and simply try to expand those winners. And in turn, over time, you'll learn to increase your size over time. But we've got to get rid of some bad habits. And Douglas talks about these. How many of you have read the Douglas book? Just need to know how many have read it. Okay. I hope you realize he was telling the truth that analysis is not the answer to great, enormous rewards in the market. Because I know some amazing traders that know everything about the market and they still can't get a trade right. And I know some people who do simple stuff that make nothing but money. So I just want you to know there is gold in that book. You need to read Trading in the Zone by Mark Douglas. Trading in the Zone by Mark Douglas. You need to read it. You can get it on Audible. It's also an audio book. But what Douglas teaches are the parts that are going to make this work. It's the belief that you have. In other words, it's the belief that once I took that trade on VRX, once I entered in on that trade, I knew at that moment I'm going to lose X number of dollars. I accept I'm going to lose X number of dollars if it breaks this because the idea is no longer valid. And I've accepted that in my heart of hearts the moment I've entered. Because if I sit there and not accept that and look to protect that money every 5 minutes, that one trade will drive me out of my mind. How many of you are balance checkers? Checking your balance every single moment, day, multiple times throughout the day. How many? Balance checkers. Balance checking is horrible. Horrible. How many of you are checking, are constantly reconsidering your stop? Constantly reconsidering your stop, wanting to move it, wanting to change it, think you maybe should have moved it up already. Okay? All of these things are difficulties, and I'll tell you why, is that it's hard to, a lot of these come down to acceptance. Like the inability to just accept the stop often means you're not accepting the risk that already comes in every trade. I can promise you that I have never taken a trade where the odds are 99.9% I was going to be right. I mean, nothing. Even a beautiful screw bar, even this gorgeous screw bar, even this gorgeous, horrible close on Tesla, and gapping right to the prior day's high, like to the tick almost. Even that, I know that's maybe 80, 75%. I know there's a 25% chance I was going to eat $2 right there. I mean, it was just, I know it. I'm accepted it. I say to my brain, is this worth $2 right here if I have to give it $2? It doesn't even need $2, but is it worth losing $2 to see if that was the swing low off the 50-day moving average on a gap over the prior day's high? And the answer was, you get to a point where you understand what I teach you, and you say, gosh darn it, it's worthy of losing $2, and I'm going to take that loss without hesitation because it's worthy right here. We have to get to that point. We have to get to that point where we can say it. You guys saw me do the same thing on NVIDIA. Everybody on that one day on NVIDIA was wondering, why the heck was I saying it was special? Gorgeous perfection, absolute. There are things called support and resistance flips you're going to learn, and the market immediately flipped polarity in a matter of 2 seconds off of the open. The entire polarity of the chart, like a battery, positive and negative charge, it went from having a negative charge to that spot to having a positive polarity in literally fractions of a second. And at that moment, the trade was instantly along. It didn't matter if it gapped. Folks, I'm going to show you trades where they have gapped up 45% and they're still along. It wouldn't matter if it gapped up 140%. If there's something technical that is in the cards that is that clear and precise, there's somebody who knows something and will be there. I'll never forget it. Somebody thought I was crazy. Let me try to pull up the, was it LJPC? Yeah, somebody thought was it this one? Yeah, everybody thought this was a stock I called long that everybody thought I was out of my mind on this call. Out of my mind. They thought I was just losing it. Hold on, let me get the weekly to refresh here. That didn't work. But there was a spike here, and price on the gap opened and like literally to the tick, 28.20. It like stopped dead. And I was like, this is an instant long. How can you long a stock that closed at $19.94 and opens at $28? You can't. You're going to learn that you can. There are places where you have an edge and you need to know it. And once you know what that edge is, you just know where your game is. You know where, at that point, who cares about the 50 cents? I'm taking the risk. You know, I'm going to take a shot here. This is where I got to play my game. You won't be there instantly, and you'll still have losing trades. But the risk reward on the winners will offset those losing trades. So now let's get into the actual process of getting started. I actually emailed this to myself so I could give you an example of what you're going to see in your email. Already, if you guys check your email now, there's one person who hasn't gotten it yet. I saw a deliverable issue on one person already, but you should see an email that is in your email box already. Anybody see this email already in their email box? Got it. Okay, good. So let me explain what you're doing and make it very simple. And it's important that you listen here. Don't jump ahead. Save this email. It's going to be how you remember how to access the course. The first part of the email is to set your login password. And the reason for this is I set you up an account, but I didn't have a password from you. So by you clicking that top link, you're going to go into this program called Wild Apricot, which is a database program is all it is. And it's going to ask you to set a password. It's going to send you by email, I believe an email, and it's going to allow you to set a password. After you set your password, this lower link down here, log in here, that link is what you're going to save to your bookmarks, which is the https://chartpattern.wildapricot.org. No, I don't think they're publicly traded. This is a company in Toronto or something. Anyways, you're going to open up that link and you're going to enter your email address that I gave you above, and you're going to enter the password that you set, and you're going to get to this page right here. When you get to this page, you'll notice there's a blue banner that says Getting Started Webinar, which is missing. Yes, I'll double check any failures after the class, but you'll want to check your junk mail bin. You'll want to check your spam. If you're in Google, it breaks it up on Gmail into like 6 categories. You got to go looking around and make sure you don't have it. If you don't have it, you can email me at randy@zengertradingu.com. Now, once you are in the site, the first one will be added, which is this discussion. Part 1 is the first video you're going to watch. So you understand how to watch the videos, I need you to understand that I talk fast. Because I talk fast, there's a little cog down at the bottom right here, that little cog you're going to see. It allows you to play it at half speed, double speed, or whatever. It allows you to change the speed. The other thing you need to know, those that are young and YouTubers probably know this, but not everybody, the 4 arrows that are pointing out next to it allow you to make this a full screen view. So you don't have to watch it in the small window. You can watch it as a full screen image for the video, I should say. Watch the video on your system. I suggest you don't move on to a second part without fully studying one before you begin. Everyone who took my first class, who didn't listen to my comment, I said in the first class when I did this, I said, folks, I maybe gave you 7 or 8 hours worth of total content between that and Q&As, but I think I may have shoved in about 10 years of education of what I learned. When I tell you I compressed it, compression is a joke. I have literally put in so much material in such a small amount of time that you will have to watch it many, many times. And that includes pros. Again, there's guys trading in my feed. Yesterday, I was looking to trade guys trading 2,500 option contracts on the S&P. Trust me, they're trading size in the rest. They're trading more size than I am, and they're still being told the same thing. You didn't watch that part. You missed that one aspect right there. There was a problem. So please take the time, watch fully, absorb the one video, stop, take some notes, write some questions for yourself, keep questions, go through all the way through all the videos like that, and when you're done, don't send questions yet. Go through it again. There is no way you absorbed it on the first round. There's no way. I couldn't even absorb it if I was watching it on the first round. And then what will happen is you'll start, according to this letter, you'll start sending me, after you're done, and you've watched it several times, you will start sending me questions. We will then plan a few weeks out our first Q&A. And a Q&A will be more than Q&A. I will actually go over some recent trades. I will share, I shared in the video some actual trades, but you'll see new trades or some trade ideas. You'll understand what's going on it will take a couple of Q&As to get there. Note that it is best to do this in Chrome. I said it at the beginning, but I remind you, the buttons that I showed here on the video show best in HTML5 via Chrome. So if you're using another browser and you do not see the 4 arrows pointing out or that little cog in white right here, you probably are not in Chrome. Those of you who have asked, I know there's been a lot of questions about what the forum is. The answer is you're not ready for it, and I couldn't let you in if I wanted to. So let me make something clear, because I know there's a lot of people who have asked, well, as soon as I take your class, now I get the forum. No, it doesn't work that way. I can't bring in a bunch of people that don't know the system into a room of other people that are trading actively knowing the system. It wouldn't be fair to those people that are proficient and calling trades and posting trades. So once you get to the level of you've reached and you're consistent and you want to, remind you, you don't need anything after that. I'm giving you such a brain dump here that you have more than enough information to have traded for the rest of your life. If you choose to want more, or you want to just collaborate with a bunch of traders using it, then the forum is available, and the cost right now is $99 a month. You'll have the option of then wanting to be in there as part of the group. The benefit of that group we'll get into later. It doesn't really matter. But for those of you who've been sending emails saying, can I get in now? It wouldn't make sense. It would damage the group bringing in somebody who doesn't even know what a few simple layers are. And you have to have mastered what conditions are a trade, because here's what's going to happen. Here's the difference between a trader in the chat room, the main chat room, and a trader. Let me actually show you an example. Does everybody have time for a moment so I can show you an example? Yes or no? Anybody have a moment here? You want to wait for a second? I'll show you the difference. Let me see if I can find one. Without having to get into a complex one. I'm looking for something just really simple. Bear with me. See, these are not under pressure. I'm not seeing one. I don't want to hand out one where it's going to confuse you from moment one. So bear with me. I'm looking one more second if I can find one. If not, we'll pass. But the idea wasn't to show you one that's going to be incredibly complex to begin with. Let me see. Yeah, no, it will be. I don't want to confuse you guys. So the end result is I'll do it on the Q&A. I'll show examples and the rest. I want you to first learn. I don't want to put anything into your head that's going to make it look like it's a daunting task. But the difference of the main chat room and, let's say, an example of a layered setup is, in chat, somebody will going long, FEYE or whatever the stock is. But in what we do, you're going to be writing down downtrend line backtest plus this, plus this, plus this, plus this equals entry here, stop equals here. That risk is 40 cents. 40 times 5 equals $2. Target is up here. There's nothing in the way. You have more to the formula to get to an actual setup than just, it looks good, let's buy here. It is an entire encompassing set of layers that collide, mixed with what hurdles are in the way without favors being asked, and what the reward is compared to the risk. It's all of that colliding together. That's only, you don't need it now, Sumi. The forum afterwards, the place that all these other people who have taken the class that are currently trading in is only available. It's not available now, so don't worry about it. It's only after you fully have learned it I cannot, you don't understand anything about it, so it wouldn't do you any good anyways. It's once we get to the point of where you fully understand the approach. Then it's a room, what it is it's a form, I'll show you just so you can see. This is a bunch of traders, and you know some of these names, but they are literally putting up setups and asking questions, and we're doing weekly webinars, and we do all kinds of stuff on the approach. So we're trading these setups as they come back, as they come down. But you're not even close to this point yet. It would not do you any good. I've received letters of people saying, when do we get in? You don't need it. You need to know what a layer is first, where those layers connect. You need to know how to form a setup that is highly confidential, highly defended by traders. This is my third time doing the class. So the difference of this class over the other two groups basically is it wasn't until the second group of students, which was the last ones, that I finally realized that it wasn't enough to teach you in the class layers, that I had to explain the collision concept. Some people were still, what they were doing is they were sending me setups and saying, well, this stock looks good. It's above the 200-day and it's above the 50-day. Well, those are great things to know, but if the 200-day or the 50-day aren't right under price, they aren't going to defend the reason why traders are going to not stop you out. They have zero to do with that setup helping you to defend your stock. Think about it logically. If I show you a stock, here, let's take an example. I don't even have a 20-day on right now. I took it off for a second, so hold on a second. I think I took them off. Yeah, 1 second. So, in other words, in this case where LJPC pulled back right here, there was a collision of two things here in moving averages. We had trending moving averages that were the 10 and the 20-day, both there. But if we counted the 50 as being one of our reasons for taking the trade also, the stop distance underneath the 50 and giving it a little room is now expanded by an extra $1. We really don't necessarily want to count that as one of our benefits or our reasons that defend our trade if it isn't going to defend our actual entry from getting stopped out. So it's important that we talk about this word collision because it isn't in the videos. See, the first two groups, I hadn't thought about it that way. I had simply expressed to them the idea of layers, and they figured out after a while as I knocked their setups and kept saying, I don't care that you've got a positive 50-day. That's great that you're only trading stocks over the 50-day, but it isn't going to help your setup if it isn't in the stop distance. We can only take credit for what's between us and our total risk on the trade. Those are our defense items. Those are our layers, our confluences that make a trade make sense for us to get in. Did that statement make sense? Very important to understand this theory because this is the difference that the second group is going to learn faster. I mean, the third group is going to learn faster. You as the third group are going to understand faster because you now understand the collision concept. You're not trying to count things as being positive price behaviors that have no bearing on where you're losing money. And we want to include and force ourselves to give credit to the things that are defending our dollars, not to something that may be some additional factor. We need items of technical power defending our money. That's what we need to take a trade. That's what gives us our risk management, okay? And all of you will see value in that, and you already do. Many of you already look for more than one reason to enter. So you'll understand stacking those up gives more power to a setup. It provides more reasons and more disciplines of traders to show up into that zone, okay? So if there's any last minute questions, I'll answer them now, but you're ready to start watching videos. Okay. Do you cover the video in the videos money management, how to position size relates to the size of your R, etc.? I do cover some basic rules of what I suggest, and that is often one of the Q&A things we end up discussing deeper. So that will come up soon enough, Delmar. Definitely will come up. Q&As are recorded. In fact, I've already given you some of the prior Q&As. I dropped them in so that you got the benefit of some of that data rather than having to re-ask those questions. Yeah, do I cover the software that you need? You need a charting platform. I like TradeStation. You can use Thinkorswim, which is excellent. You can use TC2000. You can use eSignal. You don't need it. You don't need to pay money for an expensive platform. You can use Charles Schwab. As long as you've got good, clear charting, you're fine. Okay, next question is, so we watched the videos, and when do we meet up again? Okay, on the bottom of that email I showed you, on the bottom of this email we discussed, it explains that after you've watched several times, begin to email me questions at randy@zangertradingu.com. I will collect those and not answer you, and I will send out a group email saying, next Thursday at 4:15, we're going to all get together, and I'm going to answer this list of questions that you sent me. Please confirm by sending any other questions by X date, and we will then review all of those questions. If you're not there, it'll still be recorded. Next one, do you just scan a bunch of charts or do you use screens for setups? We're going to discuss that. The tools that I teach you will work on any chart, pretty much on anything. So my group is trading everything from oils to options to futures to stock to you name it, it really doesn't matter. I suggest some things that we'll get into in this process, which is why choose anything more difficult than it needs to be. So by choosing strong stocks that have good, strong price action that you'll learn through the course, obviously you will have an easier time having those stocks react positively because they're already acting positive. Over time, have you kept the same layers, factors which you input, make a decision, or do they change if needed? That was actually a really good question. Each one of the people in the group uses different layers. Here's an example. Some of the pros are on Bloomberg paying for DeMark, and they have DeMark tools, and they use DeMark, what is it called, the combo and sequential numbers. So they use DeMark's indicators in their process. The answer is I don't use DeMark, but the end result is if it helps their trades, then they use them. I personally try not to add a lot of layers. I'm the kind of person that sticks with the ones that have been working for me. Another person may already have a layer that they want to review with me to see if they think it's good enough to be added to the ones that I discuss. And I will talk about it with them. I went over the DeMark ones and in fact did a quick study, and the answer was DeMark on its own I thought was personally abysmal. And that's not, I'm sorry that if Mr. DeMark is on the call, I apologize. But I thought the results were abysmal. I thought they were just horrific to me. But when put together with a couple of other tools, I immediately went, wait a minute, now they make sense. Now I get it. If you apply it in the right factor, it is a good thing to apply and use DeMark. So while I'm not a DeMark player, today or 2 days ago there was a short on LABU. I think it was 3 days ago, and it was a DeMark mixed with one of my tools that caught the high as a short. And I didn't take the trade because it didn't have the layers I needed, but that person nailed the short. So all I can say is you use the ones that you will put in your plan. I will provide you some layers that I have used that I find consistently they work in harmony together. And through the course, I have to admit that students have brought me some unbelievable layers that it's just a matter of I haven't input them yet because I haven't had the time. You can never have too many things as a factor to take a trade. If I was a slow plodding individual and wasn't who I was as a person and need to be me, the answer was, of course. That Dave example is one where his accuracy is going to blow everybody away because he does so much work on one trade. Of course, but maybe not all people are like that. Not all people are going to sit and look at every factor so carefully and skip so many trades to get to the point of where they catch that kind of consistent accuracy at that level. It doesn't mean it's for everybody. Everybody likes the result, but it just doesn't mean that it's built for everybody. So you have to be yourself. I can't explain this to you, but if any of you have trained in any style of trading and read any book, I guarantee you've read one book where you started reading and you went, this isn't for me. I did that with Dr. Elder's books. I was like, this is meaningless. This doesn't speak to me at all. I did that when reading Neeson's Candle book. Dan, asked me to read it, and I read it, and this just didn't connect with me at all. I thought it was mostly fluff, and I found most of it not to be accurate. So it's what speaks to you. It's what speaks to you. Do I have a minimum maximum market cap as a factor? I don't personally. I will show you in the class how I pick what to scan for, but you can overlay any kind of limitation to the list of stocks you trade. The group that I'm working with generally, we're right now scanning the Growth 250, which is from IBD and MarketSmith. We tend to look a lot at the Growth 250 names, quality set of names. 1 second. You got it. Have a great night. Okay, so we're gonna fold it up here for tonight. I think it's a good time to tell you you're ready to start studying. I've given you all the preamble and the noise. It's basically time to get to work, and you'll end up understanding it, I think, pretty quickly. Just in the back of your head, remember collision. You're looking for a collision of confluences in the same region. This is what our game is. So everything is all set for you. Go in your email and get started. If you have a problem, after you look in all of your junk bins and your spam folder and all of that, email me, randy@zengertradingu.com, and I will make sure we resend it out to you. So I'm going to work on that right now. Have a great night, everyone.